You're listening to It's About Data. I'm Matt Housley, and this episode, Tony Baer and I are joined by Juan Sequeda to discuss the recent IPO of CoreWeave. So Juan, welcome to the podcast. It's an honor to have you as our second guest on this show. And based on some conversations we were having last week, you have some opinions, as do we. So let's talk about the recent news that we want to discuss on this episode.
Well, okay, so there's this article right from the Wall Street Journal about how they went IPO, but the numbers were in as people were expecting more.
Yeah, CoreWeave, it's a cloud provider for GPUs.
Right. So I like to go, first of all do some parallels with the past, because the past helps us kind of inform.
Yes.
So the most recent one in the past that I'll look at is the .com boom and bust.
Yeah.
Right?
Yep.
Now, the .com boom and bust, that actually is built on one major innovation, which is the World Wide Web. So, but if you think about it, the innovation of the web starts literally 1889, 1991, and then e-commerce is the one that kind of gets people into the web, and it starts growing and growing, and then suddenly we start seeing this bubble, right?
Yeah.
And it burst around 2000s, but nothing. So yes, there's a lot of hype. It blew up, and then it all came down. But after it all, the burst, you have all of these technologies and companies that have changed the world. Google,
Yep.
Amazon, eBay, effectively later on Facebook and all that stuff, right? So all of this is kind of post crash.
Yep.
And I think so. The point is that there's been this hype after a big innovation, it goes down, and then that bubble is actually, in a way, I think, a bit healthy, because we're just going to shift through the noise and figure out what's actually something that's going to provide sustainable value. And that's what we're seeing right now. And I think so. So in this case, the analogy is the generative AI, specifically LLMs. That is the analogy with like the web. That's the innovation. And we're just seeing a hype growing, and then this is great. Let's go hype things up and go figure it out. But people will realize let's go. The dust is going to settle. We're going to figure out where there is a noise, and then where is the real impact that's going to be sustainable.
Sustainable is a key word here.
So that's the kind of the bubble that we'll see eventually will happen. Now, obviously, what happened 25 years ago, whatever, it's very different from today.
Right.
And I think there's a couple more things that's happened that we look at today. One is we're in this, a pandemic happened in the last 5 years,
Yes.
right? And that changed a lot, just culturally, the way we work, and the way we actually been doing investments, right? So we're in this whole era of ZIRP, right? The zero interest rate policies, which left to like overinvestment and super evaluations and the kind of higher expectations around this. Then you actually have things like Snowflake IPO'd, right? It was a high watermark, like one of the biggest IPOs, if not the biggest, kind of for the tech world. But then you had all of this kind of high expectations. And then also, in addition, so the pandemic, right? The whole ZIRP. Then at the same time, because people are now, I think, working more because they're in front of their computers, we start seeing more and more monies out there. So there's more companies being built around the data space. So the modern data stack kind of where they took the pendulum to one side and built so much different tools and features that became quote unquote categories and so forth. And now that part of the situation right now is that we're finding the market is trying to balance itself out. That's why we're seeing so much more consolidation in companies, and then people are kind of now lowering their temperature and all the excitement around that. So that's another aspect that's happening. And then add to the global shift, especially, and the kind of the investment sentiment, specifically in the U.S., right? All the tariffs, the uncertainties, new governments, right? Obviously, this is kind of changing kind of investor confidence. Now, heck, I'm actually seeing now more investments in Europe and in Asia, and those kind of people are maybe even shifting their investments over there. So, like, you have this big change. So, all this to say, you have a new piece of innovation that is growing. and everybody's going to hype. So there's going to be some kind of burst. You have the pandemic that changed how people were working, which led to a bunch of new kind of companies that now in retrospect, do we need all those companies? Well, I don't know. We're figuring that out. That was possible because there's all this money that was being invested in. Yeah. Now you add the whole kind of investor confidence in the US, and all this stuff is being shifted around. Now, I'm not surprised somebody doing AI data, kind of a company and trying to IPO, that it's not going well. So that's
not agree. Yeah, massive uncertainty. Maybe that's the biggest parallel here in a bubble and unsustainability. I'll add one more thing to your list of like big financial changes, like economic changes, and that is in the late 90s, venture capital was still kind of an exotic investment. Like you had to be in the inner circle. You had to know people. Maybe you needed to kind of be in this tech space to invest in venture capital. And so it was a limited flow of cash. It would go into these really promising companies. There are many big changes that have happened since then, but retirement funds have started getting into this, which means that in spite of the increasing interest rates, there is a lot of venture capital floating around. VC firms need to find places to invest that. And so you combine that massive amount of money that's just kind of out there looking to be spent, plus, frankly, one of the most exciting technical innovations, and you're going to get a bubble. And to your point, I don't think any of this is ephemeral. I don't think any of it is going away, but I think there are a lot of very big question marks.
There is more of a sentiment. There's so much money, so much spend. Yep. Yep. And then at some point, people were like, wait, come on, that's scary. Let's calm down. And now we're having kind of the shift towards like, we actually need to be a business and we need to make money, right? So we need to be efficient. So we need to really focus on like, what is our real business model? How are we delivering, providing shareholder value? I think that's that's the stuff that's coming now. And people also saying, well, AI is going to make us more efficient. It's like, well, okay, prove it to me.
Yeah.
We need less people to go do this stuff. I think that's how we're figuring it out. So.
Yeah. And this is where I want to revisit the sustainability theme. And we just mean financial sustainability. Can you pay your bills with what you're selling? And the number I kind of heard floating around with conventional, just regular ChatGPT queries before the agent stuff really took off was like 30 to 70 cents per query. And that was not sustainable, right? Like already you look at the numbers, $20 a month for an OpenAI subscription, 70 cents a query, even 30 cents a query. A lot of people are running way, way more queries. Those numbers don't quite make sense. Yep. And then this agentic stuff, right? And frankly, you could probably talk all day about this. I bet you have strong opinions. I think it is one of the most exciting innovations in the Gen AI space. However, you can be talking $1,000 a query. Yeah. And it's like, wait a minute. OpenAI is charging a couple $100 a month for their advanced subscription that lets you use these tools, but one query can cost $1,000. So I would compare the original base OpenAI ChatGPT. That's like lighting a big pile of money on fire. And the agentic queries are like setting off a nuclear weapon in Fort Knox and evaporating all of the gold, right? It's just like, so we're not sustainable.
And actually what's interesting is that I've been looking at research that is, I would say 1 or 2 years ago, I've been when I'm reviewing papers, academic papers, I'm like, I want to, people are like looking at all these efficiency, look at what we're doing today. I'm like, I want to see actually a metric of money. And now papers that I'm reviewing, people are actually including the money now. So this is interesting.
Yeah. Another comparison, I'll go further back in time and mention the video game crash. I don't think you were alive back then. I was just a kid, but 1983 video game crash. So what happened back then is mid-70s arcade games and Pong come out. Everyone's very excited. And then in 1977, the Atari VCS comes out and it doesn't sell well for a couple of years. And then all of a sudden, like 1980, it starts to blow up. People are super, super excited, pumping money into this market. Then Atari and Coleco just flood the market with very cheap video game systems. The whole thing collapses in 1983. And in 1983, everyone said, video games are done. People only want computers. They don't want video game consoles. What do we think about that now, right? It's like the bubble burst.
Fascinating. Yeah. That's a great analogy. I love that.
Yeah. And again, it comes down to sustainability, right? Like even if you have a really good product, if you flood the market with that product for too cheap, if you just dump it on the market, you're going to go out of business. That's the reality. Hopefully we can have a soft landing this time, but there are some concerning signs. Let's just say that.
Yeah, that's why always the first mover, the best product doesn't always win.
Because it's too easy to move too fast.
And then other people will learn from those mistakes and wait till the path has been paved.
Right, right. Anything else we want to talk about before we close out?
I think I said what I had to say.
Yeah, it's always a pleasure, Juan, and we'll talk again soon.
All right. Bye, everybody.
So Tony, what are your thoughts on this CoreWeave and AI industry and hype cycle in general?
Well, you both have gone through some incredible detail here, so I won't try and go back through all this, but I'll just say, in terms of how at high level I see this rolling out. And I hate to say I told you so, but I told you so, which is about a year ago. I wrote a piece in SiliconANGLE, and maybe we can put a link up there.
Sure.
And the title was, "Is That Sucking Sound Generative AI?" Now that's the piece where I rained on Gen AI's spread. In all fairness to me, I did write a follow-up piece that said, yes, there is light somewhere over the rainbow, but let's deal with the here and now, which is
Yes.
which is the long term, which is that in the short term, generative AI is a huge capital suck on the industry.
Yes.
It's a huge capital drain. And I'll give it. I mean, and the short of this is that the industry has to invest tremendous amounts up front, whether it be in development or training of models, and research into how can we do this better, and also getting together all the capacity, all the power, the infrastructure, and putting together all the the ecosystems. I mean, it's a huge mobilization for the industry. And the fact is that this is a new technology. And it's actually more than just a new technology. It's a new way of thinking about intelligence, which could, in the long term, have some very, obviously profound effects in terms of, in terms of so many things. I don't want to get too deep there, but more to the point is that this stuff takes time to roll out for us to understand. There's still too many, not just known unknowns, but also unknown unknowns. And we're still figuring out, for instance, what's the right size of models. I mean, and how should we train and all the agentic workflows and all that sort of wonderful stuff. I'll just give just an example of just what type of capital drain this is. And I'm going to use the example of Oracle, which is actually a pretty responsible player, unlike some of those out there that are just doing basically riverboat gambles. But at the face of it, if you look at, let's say, their debt to equity ratio, it's way off the charts. It's like 5 something versus, say, like the Amazons, Microsoft, et al. That are down 1 or below 1. Now, it's not that Oracle is spending irresponsibly. Probably has a lot to do with their market capital, their market cap. But in Oracle's case, it's backed by a real revenue stream, or by potential revenue stream, or I should say committed, which is RPO, required performance obligations. That's a fancy way of SEC talk to say this is our sales backlog. And they're reporting $130 billion. That far outstrips what they're spending on expanding OCI and all their capacity to handle all this generative stuff and expand their cloud footprint, obviously. That's going to take some time. Number one, it's going to take some time for Oracle to realize that revenue. Now, that's just one example, and of course, just project this through the whole industry, and it is going to be a while before the industry really sees the returns in all this. The other part of this goes back to CoreWeave. Remember, this was a song about CoreWeave.
Yes.
And that they did an IPO, and it hasn't gone quite how they had hoped. It sort of reminds me a little bit about Facebook's IPO, actually. And there are a couple ways of looking at this. The conventional wisdom was, well, maybe why didn't they IPO last year when the market was much better? And of course, on the other hand, that could have also been a very cynical way to look at it, because had they done that, they would have made out well, but their shareholders might not have done quite so well right now. So let's the other end of that is that given what's going on right now and all the uncertainty, not just about with how generative AI is going to shake out, but look at the general macroeconomic environment and the fact that we have all these. I mean, today is supposed to be, when we're recording this, supposed to be Liberation Day, where we get liberated. We have the liberty to pay much higher tariffs on everything that we buy. That's going to have some effects. That's going to have some impact on the economy. And the thing is that we really don't know what type of impact that's going to have on investment. Did they basically, did they time this right? It reminds me of an old, blues standard belted out by, the immortal Ernestine Anderson. And the name of the tune was "Never Make Your Move Too Soon." And if there's anything I think that sums up all this with CoreWeave's move, is that I think they made a move just a bit prematurely.
The trouble is, in economics, you never know when the right time is to make your move. I just want to throw one other story out there to put it on the radar for actually future episodes, and that is Cerebras, which is another company that builds gigantic GPUs on huge wafers, is also contemplating an IPO, and maybe we'll be discussing that in the next couple of weeks or months.
Or maybe somebody might learn some lessons.
Or maybe, there
one
could
could always hope.
Yeah, just like we've kind of seen with Databricks, where they've talked about it many times and then pulled back for a variety of reasons, and we're still waiting.
That would be true.
Anything else you want to mention as we close out here?
I think that's about as much speculation as I feel comfortable putting out today.
It's more than I feel comfortable putting out, but here we are.
Whatever. That's our job. It's an ugly job, but somebody's got to do it.
Exactly right. Thank you again. And we'll talk soon.
Talk to you soon.